Welcome back to the numbers. I just wanted to do a very quick update. I know I'm coming to you late here. I wanted to look at STEM Inc. symbol STEM listed here on the New York, and this company is reporting earnings tomorrow after the close. Well, technically today now, but they're reporting earnings, and as you see, estimates of a loss of 20.7 cents on revenue at 39.7 million, and they went basically right down the middle with the guidance. Because if we go back to last quarter. This is when the company reported earnings right here. Lag estimates. No, wait, is that the article? Bear with me, bear with me. STEM forecast Q3 revenue range 30 to 50 million. And they went right down the middle of the plate with that one, 39.7 million. So, based on unfortunately underwhelming results over the last couple of quarters, I'm probably going to assume that the company's going to miss earnings. However, we had this gap down last quarter, and we can see that estimates were down here at 64 million. The company came in with about half that. They reported about 34 million, huge miss. They incurred a very big loss of almost 550 million during the quarter. So the stock chunks down, and we hit this low here of about 30 cents, 30 and a third. And then we had a little bit of momentum come back up, and then we pulled back, had a little bounce off the 20-day moving average. So it looks like it's trying to like step up here going into earnings. And depending on what we actually get reported is probably going to dictate what's going to happen, obviously. But I'm talking about, more importantly, about the potential U-turn recovery. Because if you recall, when these earnings came out last quarter, that's when they made a couple of changes on the inside. They got rid of one or two people. You can see they brought in a new guy here as the CFO, and CFO, and this is showing us numbers. But there was also someone else that they completely got rid of. They dissolved. Yeah, here we go. Rakesh Patel, leaving company as role is eliminated. Just completely got that guy out of there. But basically, this is the restructuring the internal restructuring that this company needs to do right now, right? Because if we find out that, oh, it was just, incompetence and we had the wrong people in the right places, now we move some people around, now we have the right people in the right places, and it's all going to start turning around. So if that is the narrative, supposedly, that they're laying out, because of course we know they've been trying to remain optimistic every quarter. Meanwhile, they're just consistently disappointing. Shareholders jumping ship left and right. So the question is the recovery going to start now? Is it going to be an instantaneous reflection off of them shuffling these insiders around to these different positions? Or is it going to take another quarter? Because the problem, I said, like 1 or 2 quarters ago, I said that in 1 or 2 quarters, the company is potentially going to run into an issue, because if they keep disappointing, the stock's probably going to drop down to sub $1. Then you're going to get your NASDAQ compliant, your New York compliance letter, which they got at the end of August. STEM gets warning for non-compliance with NYSE rules. So that's why when I saw it stepping up, I was kind of hoping it would jump up above one of these trend lines and start to fill this gap potentially back to about 91 cents. But obviously it ended up calming down here and pulled back to the fib and bounced off the 20-day. But depending on what the company reports here, remember, even a slight miss could potentially be spun. Because even last quarter, supposedly, the backlog, the amazing backlog that we've spoken about, just continues to increase, apparently. And it went up last quarter, even though the actual bookings didn't really do much, and they didn't bring in much revenue. But if now we're actually able to perform, because we have more competent people behind the steering wheel, then again, we may be in for the U-turn recovery here. One of these to where we can start doing this over the next couple of quarters. So it really depends on what they report, because realistically, based on how poor the performance has been, even if the company here posts a loss of like 21.5 cents, and they post revenue of like 35, 36 million, technically it would be a miss on the top and bottom line. However, it would potentially show that we still have value here. We still potentially have a viable business. And now, instead of seeing the instantaneous recovery, we're probably going to line that up for next quarter. So the stock may drop back down to like the 30-cent range where it was, and then begin to like slowly come back up into next earnings. And then if they're able to actually beat for the first time in a while on this next quarter, then that's when life is going to potentially come back into the stock. So 1 or 2 quarters ago, I was concerned about the drop below $1 and the compliance letter, which of course they received roughly 60 days ago. Now I'm concerned with over the next 1 or 2 quarters if the moves that they made internally are actually able to turn the overall business around. Because if not, we may just go completely down to zero. So that's why now they have this report and maybe next report to keep their heads above water and really try to turn this whole situation around, try to climb the stock up with some positive catalysts, maybe some positive numbers. Again, we would be talking roughly about early February. If we look roughly 3 months from today, right? These earnings are coming out end of October, so we'd have to go boom, like end of January, early February for the next quarter. So that's what I mean. It has to happen here. Otherwise, it's just going to get worse and worse. And again, it's probably going to be a reverse stock split because if it doesn't change soon, then they won't be able to get back to $1 organically, right? So these are the few issues that we spoke about over the last couple of updates. And it's just unfortunate, again, because they were talking about that growing backlog. And this is what I mean. You give a company the benefit of the doubt, and you just have some situations where they just can't get the job done. They don't have the proper management. And again, shout out to those people in previous updates who were mentioning that they're kind of familiar with the company and, they might be dealing with, some issues with their salespeople and whatnot, the sales team. So, there were a couple of warning signs out there. And this is why sometimes you have to just bet on that consistency and look for that green more than that red. And it's hard to time a situation like this because we see it dropping down. And even sometimes when we crunch the numbers, we could make the argument, oh, it's undervalued. I might want to step in here and catch, a huge rebound. But if the company isn't able to deliver, and it kind of forces the stock to bottom out and then start climbing, then essentially what you're doing is you're really just kind of trying to catch a falling knife. And you're just trying to predict like that perfect time to when you're positioning yourself at the quote unquote bottom and then just riding that impulse massive wave back up. But it's difficult to time, and I'm sure even a quarter or two ago, there may have been a couple of traders out there who kept an eye on it and said, no, I'm going to play at this earnings, I feel confident, and then they completely disappoint. And then even last quarter, again, they dipped it slightly below $1 and then bounced it back up coming into earnings, so people might have said, oh, it's really got beaten up, it's down to $1 a share, just broke down to 90 cents, so I'm going to step in, I'm going to buy now. If they beat, the stock should shoot up back to like $2. I could try to double my money real quick. And again, the company disappoints and reports light numbers. So that's why it really depends what the company reports to determine if we're going to immediately start gaining momentum and maybe fill that gap on some positive news, maybe on the horizon, if they tell us over the next 1 to 2 quarters. If they try to, if they're able to breathe some life back into it, then maybe we can actually start climbing. But we do have a couple of resistance levels to get above in order to do that. But it could get back to 91. It just might take next quarter. And it's unfortunate because it's basically just been down since it got listed. We can see Barclays recently cut price target from $4 to $1. Susquehanna raised it actually from 50 cents to 60 cents. But people, for the most part, after seeing what the company reported over the last couple of quarters, again, they got their compliance letter. So right now, everyone's just neutral. No one's really positive for the most part anymore. I think I saw maybe one buy rating. Downgrades them from positive to neutral, adjust price target down to 50 cents from $2. Yeah, so the company is really struggling here. Stem cut to neutral from positive. Price target. Oh yeah, no, we just read that. Maintain neutral at Goldman Sachs. Price target cut $1.40 down to 75 cents. Still technically higher than where the stock is currently trading. Maintained at a buy at UBS from 2.50 to $1 a share. So this is why, again, they've technically been performing poorly. But if we're going to go with the narrative that we had incompetent people in charge, we got them the heck out of there, now the company's really going to start moving along. We're going to start churning. You watch what happens. So if we have that kind of narrative now coming out of the company, that's why I'm saying it might not happen this earnings report, but we could possibly be percolating to gear up for next earnings report. And that's why I say now with new management and the insider shuffling, that's why I'm saying, in my opinion, Wall Street probably going to give this company another 1 to 2 quarters before they get taken to the shed. I don't know why I closed out of that, but reading, buy at UBS. Yep, UBS. Cut to hold from buy, TD Cowen. Price target cut from $4 to $1. So that's why the stock got really beaten up. So technically, a lot of these price targets are higher than where the stock is currently trading. But we have to see how close they can actually come to beating those estimates, because, we always talk about the backlog, and that's one of the main things we focus on. And a few other positives are out there. If we go back to the earnings report, maintained that outperformed by Evercore. Price target cut from 9 to 5. I'm curious how they feel now, but technically at the time, they were even more bullish than everyone else. So even if they maintain a buy, even if they lowered their price target to $3, they're still technically bullish on it. Right, we had the CFO change. Bear with me. Bear with me. Yeah, we had a big loss last quarter. Here we go. Yep, Bill Bush to step down as CFO. So revenue down big, about 63%, down from 93 to 34 million. GAAP gross profit 9.4, down from 11.9. GAAP gross margin 28% is up from 13%. So that's why, again, even though it seems like a very trash company right now, we do technically have some fundamentals moving in the right direction. And it's just unfortunate that they came out of the gate with such a high valuation, because they technically weren't really established, it feels like. So, it's like every quarter you want to try to look at the positives and feel that now it's a buy. But, unfortunately, we're just going to have to wait to see the proof in the pudding in the actual numbers. Which is, again, why I say that, if you want more quote unquote of a sure thing, if you will, follow the money, follow the revenue. Non-GAAP gross profit 13.5 million, that's down. Non-GAAP gross margin 40%, up from 18%. Net loss 582 million due to a one-time non-cash $547 million impairment of goodwill. So that's why that was a huge negative, and the company ended up reporting that huge loss last quarter. And they see, of course, that they missed on revenue as well, and revenue dropped. So they just completely chunked it down. Again, initially broke $1, got to about, I think, 91, 92 cents. They chunked it all the way down to 50, and then slowly sold it off down to the new lows of 30. But see also something like the operating cash flow, loss of 11.9 million versus 165 million. So that's why, again, some of these metrics are moving in the right direction. So that's why I'm very curious to see what they report. Was it true incompetence? Did you literally put the wrong person in the right position? And now you screwed over yourself, shareholders, everyone for the last 4 years or whatever, however long it's been. Ended the quarter with a touch below 90 million in cash versus 112.8. Yep. Bookings of 25.4 million versus 236 million in Q2, driven primarily by increased quarterly variability associated with STEM's continued expansion into large utility scale projects. Right? They said they were going to trim off some of the smaller ones that had smaller margins for them, and they were going to focus on the bigger, larger projects that they had on the sheet there. This is why, again, I'm curious. I'm curious to see exactly what they report. Contracted backlog of 1.6 billion, up from 1.4 billion at the see what this is what I mean. This is why it's very, very hard to try to determine exactly where this company is going to go. Not even just the stock, just where the company is going to go. I can't make sense of anything. Some things are up, but things are down, but we have business on the back burner, but we can't do any business. And like, I don't, it's pulling you in every direction here. Contracted storage, assets under management, 5.8 gigawatt hours, unchanged. Solar monitoring AUM, 26.9 gigawatts, unchanged. 90.1 million, up from 74.9 million at the end of Q2 of 23, and up from 89.3 million at the end of Q1 of 24. This is why, again, we might just have to get to a point to where we've pulled the revenue and EPS estimates so low that the company almost can't miss, right? We have to almost artificially put in support for this business in its current state with low ball estimates and try to give them 1, 2, 3 little stepping stones to kind of get churning along again, right? But technically, we really shouldn't do that, and it should be only the strong survive. And whatever it comes down to, if you had, a service that, became unpopular, if you had a product that nobody liked, that you sunk too much into, if you had a piss poor management team and they just screwed over the entire business, whatever it is, only the strong survive. And I think that's why now we have maybe a quarter or two before we really see what's going to happen with STEM. But really quick, let's look at stock charts and I'll let you go. So we can see the stock bounce back here off the 50-day moving average, sitting here at 54 cents, technically above the moving average and the mid-Bollinger Band. So if we do get some kind of inline reaction, this is why we can start to run up here and maybe retest like this 80-cent level and try to do that gap fill real quick. But it would be asking for a lot. So we'll see again what this insider shuffling actually shows us in the numbers. But if it is able to gain momentum, it could easily get back up here, maybe to like this $1.20 level maybe, and try to meet up with this 200-day. But again, we're talking about maybe over the next month or two. He really needs a good report, and I don't know what's going to happen. RSI sub 36 on the weekly, but again, this is one that people maybe you see a little bump when the RSI goes sub 30, but again, people know that the numbers have been disappointing and underwhelming, to say the least. So that's why after you do have a little bit of a run up, you always basically give it right back and sell off, run up, sell off, run up, up. Staying below the mid-Bollinger Band, you'd have to go back to the middle of 23 before the last time this stock was above the mid-Bollinger Band. We're looking at the weekly here. And again, when it did get above, you can see it only lasted for like a month and a half. And then before that, look, that's what I mean. Here you had a stretch, maybe of 2 months, it was above. So you had, what, a 4-month window. Look at this. Going all the way back to mid-21. You had a 4-month total window that the stock was above the mid-Bollinger Band. It's been nothing but down and down. So this is why this is a company right now that is very heavily weighted on these numbers. And if we can see, like I said, a loss of 22 cents, maybe they brought in 36, 37 million, they got kind of close, then maybe we can get a little breath coming back in and giving life into STEM. But right now, everyone's just pretty bearish on it. But again, I know I'm coming to you late with this update, but I just wanted to give you guys a little something and just a few little technicals I'm watching and how I personally feel about the numbers. And of course, tomorrow, technically today, but tomorrow, when the numbers come out, we'll do another update video. We'll go over them together. But that's pretty much it. So once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.